banking crisis, there's a slurry of layoff and the top management reject. They've pretty much dominated the discussion when it comes to the IT sector. The entire outperformance, despite this, IT index has outperformed Nifty by 450 basis points, at least for the quarter gone by. But today, TCS will set the direction for the IT companies. And to discuss the earnings of the IT giant along with the entire sector, we're being joined by Chandra Srikant, the editor of Technology and Startup. Good morning there.
Hey Nikki, good to be on your show. Good morning.
Good morning. It's going to be clearly a busy day, and I'm going to just start off by asking you about what do you make out of these earnings, and do you expect the mid cap IT space to do better than the large cap before we narrow down our discussion to TCS?
It's tough to guess whether mid cap will do better than large cap or not. But what a lot of people are saying is that the current macroeconomic uncertainty, the delay in budgets, could actually work to the advantage of larger companies because people expect a certain degree of vendor consolidation among clients. So we'll really have to wait and see what the impact is going to be. But compared to the euphoria that we saw in 2020, 2021, where there was a huge shift to cloud migration, digitization, something that IT companies benefited from in a significant manner, there is a lot of uncertainty this time around because of the overall uncertainty in macro, coupled with a banking crisis in the US. Remember, the BFSI space contributes the most in terms of revenues for all IT companies. So, the collapse of Silicon Valley Bank, Signature Bank, then, the collapse of Credit Suisse, all this has had a contagion effect. Though deals haven't started getting cancelled, there is certainly a delay in conversion. So all these factors are playing on the minds of analysts as they wait to hear from the TCS management this evening.
All right, Chandra, before we further deep dive into TCS, just a broad flavor of what do you make out in terms of the revenue growth? Do you expect that to be a moderate revenue growth, better margin profile due to high utilization levels? How can you look at the top line and the operational performance before we kind of address TCS?
Right, as you said, TCS, apart from earnings, has a unique set of factors to watch out for. We have an outgoing CEO, Rajesh Gopinathan. We have an incoming CEO, Krithivasan, waiting in the wings, and a crushing banking crisis, as I mentioned. If you look at top line, bottom line expectations, the CNBC poll, predicts 1.9% for the fourth quarter. They expect EBIT margins of 25%, which is higher by 500 basis points compared to 24.5% for Q3. But if you look at the entire year, right, which is FY23, analysts we've been speaking to expect TCS to end at 13% compared to the 15% growth that they saw in FY22. So there's clearly going to be a moderation in growth. Now, TCS, of course, does not give guidance, but all eyes will be on the management commentary this evening. What is the growth that they expect for the June quarter? Are they seeing a moderation? What is the growth that they expect for FY24? And is this the end of the double digit run for IT and TCS in particular? Because we have seen growth moderating from 15% to 13%. So, how's it going to end for FY24? Can we still expect a double digit growth, or will it slip into this late single digit growth trajectory again? So these are some of the things to watch out for. As you said, utilization has been picking up, hiring numbers have been slowing down, and companies have been able to contain attrition as well. So I don't think we are going to see record hiring numbers like we saw post pandemic. In fact, for Q3 itself, for the first time in many quarters, we saw TCS headcount actually showing a decline. So again, hiring numbers, net addition numbers, very important to watch out for because that's a short indicator of the growth that the company is expecting.
Sure, Chandra. If you were just supposed to pen down three or, figure out three key monitorables apart from the net additions number, which would be the other two key monitorables for you?
Right. One would be the revenue growth that we saw for Q4, what they expect in Q1, the quality of their commentary. They are obviously not going to give a number, but in terms of, the qualitative aspects of their commentary, what do they expect? The margin trajectory, how it's going to pan out. And Third and most important, the deal wins. Will they still stick to the guided 7 to 9 billion TCV per quarter? Do they expect a moderation in that number? What is their commentary with respect to IT budgets, with respect to deal wins? I think that's going to be very important. And one particular deal that the street is watching out for is the massive deal that they were supposed to win from BSNL. So when is that going to be part of the TCV? So I think revenue margin deal wins, apart from the commentary that we can expect from the incoming CEO Kriti Vasan. Will there be changes in strategy? What are his focus areas going to be? Remember, he was the BFSI head before becoming CEO. So what is his take on the banking crisis in the US?
Sure, Chandra, that was exactly what I was going to ask you next. Although we're not expecting much of strategy change coming in from the new CEO who's already been in the system for the last 34 years, almost heading the BFSI division. Having said that, do you see any kind of changes which will percolate down in any other parameters because of the new CEO? Any changes that can be, something that needs to be watched out for within this press release for TCS?
Right. So if you look at Kriti Vasan's first briefing, a day after he was named CEO, he was very clear that there are not going to be any radical changes or shifts in strategy. But a day or two after that, we reported that he wasn't too happy with the reorganization that happened under Rajesh Gopinathan. So in fact, he was so displeased with it that he, kept out his own vertical from the reorg. So I think, questions around whether they will continue with the reorg, whether they will roll it back, whether they will introduce tweaks. Those are some of the things to watch out for, and how he plans to navigate the current environment, because he's taking charge as CEO in what is going to be a turbulent time for the IT industry. There is just so much uncertainty around, no clarity on budgets, delays in decision making. So I think it's going to be a challenging tenure, at least in the beginning, for him. He also needs to gain confidence of the second level and the third level, but that should be easier because he's been in the system. But I think what he says on strategy, his take on the macro environment, his take on demand, people will keenly watch out for what he's saying today.
Chandra, in the morning I was chatting with Gurmeet Chadda from Complete Circle, and he suggested that most of the negatives have somewhat been priced in, and in fact, Street will be looking in for any positive indicators, if at all, to show a slight amount of recovery, like the one that we've seen in the US stocks. Do you think any of this is going to be possible in this quarter? It's just a soft quarter now, but the road ahead could be a little better, if not too difficult, and the Street is rather pricing in too much of fear and negatives right now.
Hard to say. Q3, Q4, are traditionally soft quarters for IT compared to Q1, Q2. So I think people don't expect blowout numbers per se. But as I said, I think a lot will depend on the CEO transition. What's the plan there? What is Kriti Vasan's strategy going to be? So I think TCS, apart from the numbers itself, a lot will depend on the quality of the commentary that we see today. And interestingly, Kriti Vasan is going to be part of not only the press conference, but also the earnings call along with Rajesh Gopinathan. So I think that dynamic is something that people will watch out for. But whether the negatives are priced in, we will have to wait and see. It will depend on what kind of deal ones they are reporting. More importantly, their commentary with respect to the revenue growth and deal wins that they see going forward. Will they still stick to that 7 to 9% TCV? Do they see some softness kicking in? Those are some of the things to watch out for. But as I said, people also expect TCS to benefit in the current environment, because usually in times of uncertainty, when clients are pulling back, there is a trend of vendor consolidation where the bigger companies end up gaining more than the smaller companies. So these could work in TCS's favor. Also, they have excellent execution jobs, so that's also something that could work in their favor. But whether all negatives are priced in, it will depend on what they say today with respect to revenue margin, deal wins, and what they expect going forward.
That's pretty much covering all the bases out there. But then I'm going to quickly squeeze in last question before we let you go. It's going to be more on what do you overall think about the buybacks, about the cut in the variable pays, additions, if at all. How are you looking at the entire scenario right now?
So buyback, I think people are expecting, but people will also want to know what they are planning to do with respect to, as you said, variable pay, onboarding of freshers. Because one trend that we have seen across IT companies, Wipro, for instance, offered freshers, half of the original pay promised. On Sunday, we broke a story on how LTI Mindtree has delayed onboarding. So, this clearly shows the kind of stress that's there in the sector, the kind of uncertainty that's there. So, people will, of course, look for their commentary, whether they are onboarding freshers on time, what's the plan with respect to pay, will they pay out 100% of variable pay? Those are other factors to watch out for.
All right, Chandra, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you, Nikki. Great being on your show.
Pleasure. All right, just to give a little bit perspective, revenue guidance, if we talk about the revenue performance for TCS for the last 4 or 5 quarters, it's been more or less in line with what the street was estimating. If you talk about the performance in terms of the stock price, TCS has lost more than 13% in the last 12 months as compared to the loss overall for the Nifty IT sector. Right now, most of the analysts still have a buy rating on this one, but remains to be seen whether this quarter could be any different for TCS. With this, it's a wrap. Thank you so much for joining in.